Hello and welcome to another update video about MATIC. The MATIC chart has formed 5 waves up into the December high. As you might know, new members or new viewers might not know this, but in September we started to observe the beginning of a new 5-wave move up, which is good, which is potentially bullish. Yes, it's only a diagonal pattern, but still can be bullish as long as support levels are holding. At least we can work with 5-wave moves to the upside. And then we were watching for a 3-wave pullback into the support region. That support so far did hold. For this wave degree, in this wave 2, the support region is between 58 cents and 80 cents. Quite a large area, but not so large if you look at the magnitude and the wave degree that we're dealing with, because the next move up in a larger third wave should take us minimally to here $2.12, possibly higher. So really good reward to risk ratio, and that just requires a larger, let's say a larger support zone, which the price can use because we're dealing with a volatile crypto space. But yeah, really good reward to risk ratio. The expectations here were basically followed. Okay, the market did basically what we wanted it to do. It formed the 5 waves up. Up here, I highlighted, at some point here in this region, we should see this wave 2 pullback. A wave happened, B wave happened. There was a strong signal that a C wave should still follow, which it did, and it landed in the middle here between the golden ratio level at 66.7 cents and the 50% fib level. And yeah, it's basically a really good an area for it to turn around for a C wave, to land in this area is very typical retracement, zone. Okay, and if we now say that the third wave to the upside is unfolding, then as I said, we should get to $2.12 plus, but this is only the larger wave degree. You could say the main wave degree. Looking at the microstructure, the market also followed Fibonacci ratios really well and showed us a fairly clear 5-wave structure to the upside. Don't get me wrong, not all coins or not all charts can be analyzed to that degree. MATIC really shows some clear structures, which is really helpful and really good. Not all coins do that at the moment, right? That's just a lot of coins can only be analyzed on the larger time frame. They don't show that level of detail. And let's say those, in the end, those waves represent the market sentiment. And sometimes we can read it really well. Then we get a really good edge with Elliott wave, and sometimes not so much. Then other methods might be more appropriate. But for here, we have another 5-wave move up, which would be a wave 1 within that larger third wave. Then I defined another support area for you. The market reacted to it. And we've got another 5-wave move up, okay? So this suggests now that this is another wave 1 of this larger third wave. This third wave, okay, which is again the next larger wave degree, should take us to around about $1. So that means we're now tracking, okay, has this third wave started? Has a wave 2 finished on the 5th of February? And we need to see the first initial 5 waves again as evidence. Once we have those 5 waves, which we have now, we can add another support area to the chart. That's what I did today. And we've got this support zone between 77.9 and 81.2 cents, which I added to the chart, which obviously is now a very small wave degree. Smallest wave degrees, they are very fragile and they change a lot, so please be aware of that. It's a 5-wave move. It's a bit questionable due to the length of this move up here, but it could be an expanding diagonal. They are rare, but they happen on these smaller time frames. So it could be a 5-wave move. I give it the benefit of the doubt. As long as we're holding 77.9 cents, I'm looking at higher, and I am primarily watching for higher prices as long as this orange support zone is respected. Pullback into the zone could provide another opportunity, but at the same time, the Fibonacci levels tell us when we're likely breaking back into the wave 2, because this could simply be a high B wave. Nothing I'm primarily watching for, but it's possible that this yellow wave A was just part of a larger wave 2. Okay, so this is possible as an alternative. 3 waves in wave A typically indicate that the B wave can overshoot, which it did. Yeah, you might ask, okay, but a B wave is a 3-wave move. This here is a 5-wave move. Shouldn't it really be wave 1? Well, that's what I'm primarily watching for. However, wave 1 is not an impulse. can be a diagonal because we have overlap between wave 1 and 4. Therefore, we cannot trust it. Therefore, we could easily interpret it as a correction as well, like a WXY structure. So we have to be careful still, yeah. I mean, always, you know, anything can break. You know, it's all about understanding, okay, what are the levels that now need to hold to keep the upside pressure alive? So Elliott wave isn't predicting it's going to hold. It just tells you when does the market changes its mood. And the market will likely change its mood with a sustained break below 77.9 cents. Very valuable knowledge. But if that happens, we would simply fall back into the yellow support zone here, which goes down then to round about 72 cents. But primarily I'm watching for the development of this third wave now, and I'll keep you updated. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.